Tiff Macklem and the Bank of Canada surprised nobody today when they maintained their overnight policy rate at 5%. In doing so, have they laid the groundwork for another crazy spring market, much like we saw in early 2023? Hey everybody, and welcome back to the channel. It's me, Rob Marsiglio, sales representative with Keller Williams Referred Urban, out here in Durham region helping the great people of this area and doing my best to bring you weekly content on all things Greater Toronto Area real estate. No surprise, this week we're going to talk a little bit about the rate announcement and what that may mean for the market going forward. Like I said off the top, this announcement by the Bank of Canada was no surprise, and the markets really didn't respond whatsoever. The Canada 5-year bond yield, the number that is most closely tied to 5-year fixed rate mortgage products in Canada, had already been at levels last seen in June. Now they're at levels last seen in May, and very similar to levels that we saw in January of 2023. In terms of rates going forward, the markets didn't really change their opinions as to what they think is going to happen. They still see cuts starting sometime next year, and we may see somewhere between 150 basis points of cuts throughout 2024. Again, that's no guarantee. In the mortgage world, even prior to the Bank of Canada's announcement, people like Rob Campbell and Ron Butler were on Twitter saying they had seen fixed rate mortgage products starting with the number 4. Over at wawa.ca, we can see that where the rates currently are in December are still higher than what they were in January of 2023, but they may be starting to trend back downwards. Now, with all this going on, I think my colleague Daniel Foch put it best when he said the rate drop reality bull thesis may be tested in the coming months. The question is, do we see a repeat of the frenzy that we saw in spring markets like in early 2017 and 2023? Before we go any further and I share any more information with you, let me know in the comments below, what do you think is going to happen with the real estate market over the next few months? Sales in November continued the same trend that we've seen throughout the year, much lower than average. We reported just around 4,200 sales. Usually at this time of year, you're expecting to see 6,600 sales. And the 4,200 sales reported in November of 2023 were actually the lowest since November of 2008. Projecting that forward to next month, we are used to seeing about a 30% drop in sales activity from November to December in any given year. Even in that 2008 year, we saw sales drop way off to record lows of just over 2,500 sales. All that being said, with a 30% drop this year, I'd expect we end up somewhere in the 3,000 sale range. What about active inventory or the supply side of the equation? I think it's safe to say that we will see higher than seasonal inventory for this time of year. Early 2023, you can see inventory was tight. That did play a big role in some of these price gains that we saw early in the year. Inventory did climb every single month right up to October, and this is the first time all year that we've seen inventory come down. Similar to sales activity, we'd expect to see inventory drop off about 30%. That drop in inventory won't be as a result of sales more than likely though. At this time of year, it's terminations, suspensions, and expiries that really pull down active inventory. And you can see for 2023, going back to July, that's when terminations, suspensions, and expiries really started having the bigger downward pull on active inventory. And here we highlight it one more way. You can see that we're used to, at this time of year, sales as a percentage of new listings hovering somewhere around 70%. This year, they're down at around 40%. So really, to see another spring market like we saw in 2017 or 2023, we're banking on inventory being extremely low, lower than what we'd historically expect. And we're expecting sales to be higher than what we'd historically expect, something that the trends just aren't showing lately. In my opinion, this is a more likely scenario of what some rate cuts could mean. I think rate drops may help some people on the fringe at the time of renewal, and this thread that I shared on Twitter is a great breakdown of why I don't see home prices skyrocketing just as a result of rate drops. And there are a lot of people that will be renewing mortgages in the next 2 years. As Hanif Baya from WOW pointed out, over the next 6 months, 1.07% of all Canadian mortgages will be renewed per month. The next 6 months, that jumps to 1.36% per month. And then for the year following, that jumps up to 1.78% per month. That's a lot of extra cost that could be potentially falling on households depending on the spread between what the rates were when they got into that place and what the rates are going to be at renewal. It's those people that I think are hoping rates come down just so that they can stay in their homes a little more comfortably. But I want to know what you think. Let me know. Who do you think will benefit the most from rate drops? Is it the current homeowners or is it the people trying to get into homes? How do you see the next few months of real estate in the GTA playing out? Thanks so much for sticking with me through another video. I hope I brought some value with this one. As always, until we speak again next time, please stay safe and cheers. Hey there, I really appreciate you watching this video all the way to the end. If you enjoyed it, I've got another video for you right here on the screen. And while you're here, maybe just click on my face, subscribe to. I don't want you to miss anything going forward.